Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications.
Today, we're diving into some of the most exciting movements in the market, especially with Alphabet stock soaring after the court's decision allowing Google to keep its Chrome browser. We'll also look at the bigger picture, analyzing the impact of a polarized world between the US and China on the global economy. Plus, we have updates on NVIDIA denying a chip shortage, ASML's price target being cut by BofA, and Zscaler stock jumping after a great earnings report. Let's follow these stories and see how they could affect our investment portfolios.
JOYUP Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours.
Let's start with Alphabet, or as we all know it, Google. The stock surged by 7.1% in after-hours trading. The reason? A court ruled that Google can keep its Chrome browser and Android, so they don't have to sell them off as the Department of Justice had demanded. Let me explain the concept of antitrust or anti-monopoly lawsuits in a simple way. Think of it like this. If a fried rice shop at the market makes a deal with the market owner to be the only shop selling fried rice, customers have no other choice. That's a monopoly. For investors, this news is super interesting because Google doesn't have to split up its core businesses. This means Google's ecosystem remains intact. Just imagine Chrome, Android, and Google Search all working together seamlessly. It's like cooking a delicious Thai meal. You need all the ingredients like fish sauce, chili, and shrimp paste to make it perfect.
What's also fascinating is that Apple stock also benefited, gaining 2.8%. This is because Google will continue to pay billions of dollars to Apple to keep Google Search as the default search engine on Safari. From an investor's perspective, the court's decision not to break up the company means that Alphabet's revenue stream is still solid, especially its advertising revenue, which makes up 80% of its total income. For those of you interested in tech stocks, this news is a positive sign that the government might not be as harsh on big tech as we thought. But don't forget, Google still has to share some search data with competitors and can't enter into exclusive agreements anymore, which might lead to increased competition in the long run. As for the overall market today, S&P 500 futures are up 0.1%, NASDAQ is up 0.2%, but the Dow is down 0.2% due to ongoing concerns about President Trump's trade tariffs, which were recently ruled illegal by an appeals court.
Next, let's talk about what Wells Fargo is saying. They've stated that the world is entering the second age of deglobalization. To put it simply, the world, which used to be united by trade, is now splitting into two big camps, Team America and Team China. It's like picking a side in an online game. For investors, this trend creates both opportunities and risks. The opportunity is that companies within the same camp will benefit from increased trade with one another. The risk is that production costs might go up as companies have to find new suppliers. Wells Fargo suggests that most G10 countries will side with the US, while many in Asia and Africa might lean towards China. What's interesting is that Latin America will be a battleground where both sides will compete for influence. Our advice is to look at the supply chain of the companies you're interested in, see how much they rely on China, and if they have a plan B. Speaking of reliance, let's look at the latest news from NVIDIA, a favorite among tech investors. On Tuesday, NVIDIA came out and denied the rumors of a chip shortage for its H100, H200 chips. The company stated clearly, "We have more than enough chips. There is no shortage whatsoever." But guess what? Just this rumor alone caused NVIDIA's stock to drop more than 3%. This shows how sensitive the market still is to any news about AI. The fact that NVIDIA rushed to correct the rumor shows they know investors are watching closely. What's also interesting is that NVIDIA revealed that its cloud partners can rent all available H100, H200 chips, which are high-end AI chips used for training AI. This proves that the demand is still incredibly strong. If you believe in the long-term AI revolution, this dip in tech stocks could be a good entry point.
When we talk about technology, we can't forget ASML, the world's top manufacturer of chip-making machines. Bank of America just lowered its price target from €755 to €724. The main reasons are uncertainty over taxes and the macroeconomic situation, which makes customers hesitant to order new machines. ASML is a Dutch company that's a global leader in lithography machines for making chips, and WFE, or wafer fab equipment, is just the fancy name for the tools used in wafer factories. But there's a positive side too. Even though BofA lowered the target, they still recommend a buy because ASML's technology is superior and it's almost a monopoly in the market. Plus, the intensity of lithography is expected to increase from 25% to 28% this year, meaning companies will need to use more of ASML's technology to make more complex chips, especially with the advanced EUV or extreme ultraviolet lithography technology.
Let's end with some good news. We have Zscaler, a cybersecurity company that just reported fourth quarter revenue of $719.2 million, which was higher than expected. The stock immediately surged 7% in after-hours trading. And what's even more important is that the company gave a future quarterly forecast that was also higher than analysts had predicted. CEO Jay Chaudhry said that Zero Trust Solutions, a security concept where you trust no one and have to verify everything every time, along with AI for security, are becoming essential in today's world. This is definitely true as cyber attacks increase every year. The cybersecurity business is poised for continuous growth because as the digital world expands, so do the risks.
All right, everyone, to sum things up simply for today, the world is splitting into two camps, US versus China, and investors need to look at a company's supply chain. NVIDIA has corrected the rumors, but the stock is still sensitive, showing that AI is still a hot topic. ASML, even with a lowered price target, is a good long-term investment. And Zscaler is a standout in the booming cybersecurity business. Don't forget, investing is about looking to the future, not just today or tomorrow. These big trends, AI, cybersecurity, and restructuring of supply chains, are investment themes to keep an eye on. And for all of today's insights, I have to thank the great data from investing.com. Now, let's take a look at the stock prices related to today's news. This is where I'll give you a live analysis of stock prices, updated daily, in our segment called JOYUP Forecast. Let's start with the big bank stock, Wells Fargo, WFC. The current price is $81.78. If you're holding this stock, you can smile. We're seeing clear signals that this stock is in a long-term uptrend. Since 2020, the stock has been moving consistently within an ascending channel. The current price is still close to the upper trend line of this channel, which is a great sign that the upward momentum is strong. The key support for WFC is at the $75 to $77 level, which is where the lower trend line passes through. The immediate resistance to watch is $85. Interestingly, the RSI is at 51.67, meaning it's not in the overbought zone yet, so there's still room for the price to move up. The MACD is also positive, which supports the short-term upward momentum. We expect WFC to continue moving in its upward trend for a while, especially if the U.S. economy remains strong and interest rates are favorable for banking businesses. This stock has the potential to continue climbing over the next 3 to 6 months.
From a bank stock, let's look at a growth stock like Zscaler. The current price is $274.57. This stock is definitely more volatile than a bank stock. The price is currently trying to break out of a significant resistance zone at 270 to 280, a point where the price has been rejected and pushed back down many times. However, the fact that the stock has been able to hold above $250 consistently is a good sign. The key support for ZS is at $220 to $230, a level that the price has tested and bounced off of many times in the last 6 months. If the price can break through $280 with high trading volume, it will open the door for the price to run to the $320 to $350 level. The MACD is recovering and the RSI is at 43.27, which means it's not oversold yet and has room to move up. ZS is likely to move sideways in the short term before making a clear move in either direction. Next is a very interesting case, NVIDIA, currently priced at $170.78. After a massive growth from lows around $10, $15 to a high of almost $200, the price is now showing significant consolidation within a relatively narrow trading range. The fact that the stock can hold above $160 consistently is a good sign, but its inability to break to new highs has many questioning the sustainability of its growth. The key resistance for NVIDIA is at $190 to $200, which is where it hit its all-time high. The support level to watch closely is $140 to $150. If the price tests and breaks below this level, it could signal a significant change in investor sentiment. The RSI is at 56.71 and the MACD is positive, giving a neutral signal. However, the decrease in trading volume recently might indicate a loss of conviction in the short term. NVIDIA is likely to sideways for another 2-3 months before picking a clear direction.
Let's move on to Google, GOOGL, with a current price of $211.99. This stock is in the process of trying to break out of a consolidation pattern that has been happening for the last 6 to 9 months. The stock has built a pretty strong base in the $170 to $200 range. The fact that it's back to testing the $200 plus level again is a good sign for the bull case, but it still needs to prove it can hold above this level. The key support for GOOGL is at $180 to $185, where the price has bounced back up many times over the past year. If the price can break through $220 with increased trading volume, it will open the door for it to reach the $240 to $250 level. The RSI is at 68.91, which shows it's getting close to the overbought level, but it's not at a point of major concern yet. The MACD is showing signs of acceleration, which is a positive factor. GOOGL has the potential to continue its rise in the medium term if it can break through the $220 resistance. Finally, let's talk about ASML, which is currently priced at 617.2 euros. It's a fascinating example of a tech stock that's in a transitional phase. The current price is significantly below its all-time high of over 1,000 euros from last year. This drop of more than 35–40% shows a change in sentiment towards the semiconductor and related machinery sector. Even though the stock is trying to hold above the 550–580 euro support, its inability to make clear higher highs is causing some concern about medium-term momentum. The key resistance for ASML is at 700 to 750 euros, a level that the price must break through to confirm a true recovery. The RSI is at 53.04, indicating a neutral status, but the MACD is showing signs of weakening, which is something to watch out for. If the price can't get back to test the 700 to 750 euro level in the next 2 to 3 months, there's a possibility we could see it test the 500 to 520 euro support. ASML is likely to sideways in the short term and might face downward pressure if there aren't any new positive factors.
ทั้งหมดนี้เป็นเพียงมุมมองส่วนตัวของจอยเท่านั้นนะคะ ไม่ใช่คำแนะนำการลงทุน โปรดใช้วิจารณญาณและศึกษาข้อมูลให้รอบคอบก่อนตัดสินใจ เพราะการลงทุนมีความเสี่ยงเสมอค่ะ ก่อนจะจากกันวันนี้หากคุณผู้ฟังกำลังเล่นหุ้นอยู่แล้วเกิดคำถามไม่รู้จะถามใครลองคอมเมนต์มาพูดคุยกันได้เลยค่ะแล้วพบกันใหม่ตอนหน้าบ๊ายบายค่ะ